Thank you very much, Ali. Good morning, ladies and gentlemen. Great pleasure to be back here at IDEEA and back in Athens. So, as mentioned, I'm going to talk to you about the data. I've got a lot to get through. This will be our agenda, some consumer insights. Then we'll look at global European information. We'll look at this region, quick look at Athens, and finish with a glimpse into the future. So let's get started with some consumer insights. Now, these first couple of slides, I think, a little bit obvious perhaps in terms of the information, but good to see nevertheless. So this shows us from our traveller panel that COVID is becoming less and less of an impediment to travel. Now, I think, as I say, we all know this. We're all here today. We've got no masks on. There's been no bureaucracy, no forms, no tests. We're getting back to normal. But it's good to see it qualified by our consumers. So COVID is dissipating, but when one challenge dissipates, another begins. The cost of living, of course. Again, not surprising, but you can see their transport costs, energy costs, inflation. We all know what's going on, and that's going to be a challenge for the industry. So I think obvious conclusions to an extent, but good to keep in the back of your mind as we go through this presentation. But let's now move to the data and have a look globally at what is happening. Now, this is the month of August, and we've got the actual occupancy and then the percentage change from 2019. And what we see is a two-tier recovery. So we've got the West, effectively, the Americas, and then EMEA. And you can see there, occupancy nearly there. Nearly there, and that's going to be a consistent theme throughout the presentation. We're single digits away from where we were in 2019. Whereas when you move further east to Asia Pacific, you can see it's a very different picture, and that's due, of course, to China's zero COVID policy, which is impacting performance in China, of course, but also the rest of the region, which is very reliant on Chinese outbound visitation. So a two-tier recovery there. Rates, very different. And we can see quite clearly, again, it's two-tier. If you look at the Americas, EMEA, back up above where we were quite considerably, of course, and much more of that to come. Of course, it was just mentioned increased costs for hotels. They're having to pass that on. High inflationary environment, but more information to come. Asia Pacific, China, still lagging a bit behind. So again, a two-tier recovery there. So put that all together and look at RevPAR holistically, and you'll see RevPAR as we stand for the month of August back up above 2019. We're recovered in that respect, of course, all being driven by rates, but again, Asia Pacific lagging. So that's the global picture, but what about Europe? Now, as you can see here, Europe is growing from a RevPAR perspective based on pre-pandemic levels, but occupancy still lags slightly. So the question is, of course, why? And the answer, quite straightforward, group demand, or lack thereof, I should say. As you can see, group demand is still significantly down across Europe compared to 2019. Transient's back, has been for some time now. So transient growing, but we're still missing those groups. So that's what we need to recover to gain that little bit of occupancy to take us back over those prior peaks. If we look at weekends and weekdays, leisure, as we all know, has been a key driver of the recovery. So it's not surprising to see that weekend nights are still holding up a little bit better than during the week. But make no mistake, the week is coming back. That corporate demand is coming back, and we'll see that a little bit further on as we look at business on the books in some key European cities. But let's now drill down and have a look geographically at some key European countries, looking at occupancy indexed on 2019. And Turkey is now just above where it was. Ireland, Italy, only just below, but most of those countries, as you can see, between about 95 and 99% recovered. A few lagging a little bit further behind, admittedly here in Greece, also Austria, which was later to open up and lift restrictions, and of course Russia, for reasons that we're all too aware of. Drilling down further to have a look at our cities. Now, this is occupancy year to date indexed on 2019. But we have to think back to where we were at the beginning of the year. Omicron was rife. January and February, people were not traveling. Restrictions were still in place. So actually to see Edinburgh, Dublin, Paris, Warsaw, Istanbul, all 90% plus recovered year to date is quite impressive. But as we've moved more towards the present day, things are looking better. If we just look at August as a standalone month there, Warsaw, Milan, Istanbul, back up above 2019 levels in occupancy terms. Most other cities not too far behind. So things improving. Moving to rates. And it's obviously a very different story, as you would expect to see. You see there, Turkey, Greece, Italy leading the way in terms of rate growth, all markets with strong leisure demand. But every country on this chart, with the exception of Belgium, double digits up on 2019. So rate very much back. And if we look at our cities, this is year to date. And again, don't forget January and February, but year to date indexed on 19, it's a sea of green and some really quite impressive growth numbers from a rate performance. We live, though, as we all know, in a very high inflation environment. So the question is all of this growth just inflation? And the answer is no. You can see here, we've got nominal and then real ADR indexed to 2019. So we strip out the impact of inflation, we look at real ADR indexed on 19, and since the beginning of May, it's back. It's above the levels we saw before the pandemic. So of course, inflation is driving up that rate, but real ADR is also growing. Now, another pattern that we've seen emerge during and since the pandemic, which I think is quite interesting and just worth touching upon, is class of hotel. And Demetrius mentioned this in the previous panel, and we've got a bit of a difference here. So effectively, the higher the class of hotel, the stronger the rate recovery. The lower the class of hotel, the stronger the occupancy recovery. Now, a lot of that occupancy recovery is being driven by domestic demand, which perhaps points to why economy class hotels are growing at a faster rate than the top end of the market. But of course, the luxury end, people have less resistance to pricing. So hotels have been able to push their rates a little bit more. And of course, all of that luxury ADR growth helps to boost the average rates across the city as a whole. So a bit of a dichotomy happening across Europe, but an interesting point nevertheless. Now, moving to the future and having a look at business on the books. So this is business on the books this year and then the same time last year. And I've chosen London, Paris, Brussels, but in reality, it could be any city across Europe. What I'm trying to show here is basically we're in a much, much stronger position than we were, which of course we're all aware of. And if we look at business on the books for a key range of European gateways, it's a far more traditional pattern than what we have been seeing over the last couple of years. But the interesting takeaway here for me in this chart is that actually some of these peaks are actually now during the weeks, the weekdays. So actually we're seeing that return of the corporate demand. Previously it's all been weekend peaks and weekday troughs, but we're starting to see that mix it up a little bit, which I think for our industry as a whole is a positive. And then if we look at some of those smaller markets across Europe, which are more reliant on events, more reliant therefore on groups as well, it's good to see those spikes for the events very, very prevalent. So events are returning, people's confidence is returning, and that should help that group demand, which I mentioned at the beginning of the presentation, come back to life. Now, one other pattern that we saw throughout the pandemic was the deferral of openings. These projects in the pipeline, they were signed, they were financed, so they weren't cancelled, but they were deferred. So as a result, 21 and this year especially, we're seeing a lot of new rooms coming into the market. This year we expect 100,000 new keys to open across Europe before it goes down to more historically average levels. So COVID delayed openings, it didn't stop openings. But we're not overly concerned from a forecast perspective when we take this into account. This here is the RevPAR forecast for the aggregation of those key cities that you can see at the bottom of the chart there, indexed on 2019. So as we saw at the beginning, we're back. Q4 should be 106% of 2019 levels, but then we've got a little bit of a dip as we move into the new year. Economic headwinds, energy prices, we all know what's happening, and we do think that is going to influence and drive down performance a little bit at the start of the year. But then we're quite confident, actually, that things will pick up and will recover. We're not forecasting declines. Some markets will be better than others, of course, but Europe as a whole, we're still relatively bullish about. Now, let's come a little bit more local and have a look at Southeastern Europe and how this region is performing. And the answer, quite frankly, is pretty much the same as the rest of Europe. This is occupancy for key cities across the region indexed on 2019. And if you look year to date, again, it's really rather impressive that you can see Zagreb, Belgrade, Podgorica, Skopje, all north of 90% of where they were in 2019. And remember, of course, Omicron at the beginning of the year. So this is decent performance. And as we come closer to present day and look at August as a standalone, all 4 of those cities back up above where they were. If you think back to the European map, we only had 3 cities across the whole of Europe. We've got 4 on this much smaller scale. So positive to see, and then you can see there Ljubljana, Athens, not too far behind either. But when we look at actual levels of occupancy, this is quite interesting because there's a huge divergence across the region as a whole. Now, admittedly, it's just looking at 1 month. It's looking at August, but Ljubljana, 91% occupancy. Incredible, really. You compare that internationally. Fantastic levels of performance. It's a small market, yes, but it's well connected, but it has had a lot of new supply. Nevertheless, multiple demand drivers. It's a very strong performing market. Zagreb, Athens, 76, 75%. Again, you compare that internationally, it's a positive performance. But conversely, at the other end of this chart, Cluj-Napoca, Timisoara, Sofia, Skopje, 55%. Admittedly, it's August, so it's leisure-driven demand, and these aren't leisure cities, but nevertheless, a little bit weaker. Moving to rate. Exactly what you'd expect to see, I'm sure. Year to date, we've got a sea of green there. And if we look at the month of August, the most recent full month we have, it's all up above where it was, quite considerably in some cases. 37% up here in Athens, 26% up in Belgrade. These are impressive levels of growth. But again, look at the difference in actual average rate. And Athens is the standout here, 220 euros average rate last month. Now, why is that? Partially because of the plethora of luxury and upper upscale hotels that we have in this city when compared to others. That's driving up the rate quite considerably. Rest of the cities around the 100 euro mark average rate, and then regional Romania, as again you'd expect to see, a little bit softer. But what about the resorts? That's the cities. I've taken here the Greek islands, the Turkish Riviera, the Croatian coastline, compared it to some Spanish and Portuguese resorts there. And again, the story is consistent. We are so close, but not quite there yet. Rate-wise, up consistently, led by Turkey. There's no doubt. People on holiday are paying considerably more for their accommodation than they were before the pandemic. And if you look again at actual performance for August, well, the occupancy, pretty consistent, 88% in the Algarve, 80% across the Croatian coastline. You'd expect high occupancies, of course, peak season, but a big difference in the rate. Again, partially due to the STR sample, I can't deny that, but nevertheless, those high-end hotels across the Greek islands, average rate of 387 euros, so considerable. Now, I thought it'd be rude to be in this fantastic city and not have a quick look at what's happening in Athens. And it's pretty much the same thing that's happening everywhere else, candidly. We're nearly there from an occupancy perspective, but if you look as you get closer to the present day, that gap is very, very small. Rates, you saw earlier just how impressive their rate growth was here. And throughout this period, we've seen rate increases, but if you look at the recent months, the premium's about 60 euros. It's quite considerable when you look at it as a raw number. But what's driving that? What days of the week? So here in Athens, we've got here the weekend, occupancy indexed to 2019, the weekdays, and then shoulder nights, so Sunday and Thursday. It's not surprising that the weekends are a little bit further ahead. Again, leisure has been a key driver of the recovery. But look at those shoulder nights. They're only just behind. Now, does that possibly, I would think, point to bleisure business? I know two of my colleagues that are here with me today, they've both enjoyed some time in Athens before they're starting to work. So bleisure seems to be alive and well. But a bit of a detour here, but we've actually coined a different phrase, because bleisure, it's not really a great word, is it? So we've come up with, and I'm sure many of you will remember back in the 80s, the mullet haircut, right? You know what I mean? So I personally haven't got the best hair to describe this, but the mullet is nice, short at the front, ready for business at the back. Those locks are flowing, and you're ready to party. So a bit more exciting, I think, than bleisure. We're going to call them mullet nights moving forward. And if we look at rates, those mullet nights are doing actually really quite well, but a little bit more growth during the week. And the old adage that the corporate traveller pays more alive and well here in Athens. And our forecast is really quite strong for this market, stronger than what we're seeing across Europe as a whole. You can see there's similar pattern though, back up above for the end of the year, dipping a little bit as those economic headwinds hit, but then we're quite bullish about Athens for the rest of the year. Of course, this rate growth cannot continue at the same pace that it has been. So what we expect to see is growth next year and then a flattening out. Still growth, but minimal growth for the next few years, but still every year we're forecasting up until 2026 RevPAR to grow across Athens as a whole. So a positive for the city. To the future and supply and pipeline. So before I go into the pipeline, I thought it was quite interesting to actually have a look at existing supply. And if you look at the brands there, the top brands by existing supply, it is very much leisure resort brands that dominate this region. The parent companies headed up by Marriott, but as was mentioned by Jamie on the previous panel, significant number of brands. So interesting that they're the biggest company here, but none of their brands feature in the top 10. But if we look to the future, international brands will become more and more prevalent. Accor, there are more than 6,000 keys in the pipeline across this region. Then Marriott, Hilton, more than 2,000 keys. Melia there, and then that Hard Rock. That's the Hard Rock in Helikon on the outskirts of Athens. So we're going to become more internationally brand-centric across this region as things progress. But where are those rooms? Well, unsurprising to see Romania and Greece as the two biggest countries, biggest populations, biggest economies in the region, north of 5,000 keys, then Croatia 4,000, and Albania 3.5, before things tail off a little bit. But for me, when I look at this chart, the one standout is Albania. I've mentioned this previously, other IDEEA events. It's still a relatively undeveloped market, but we're seeing a lot of interest and a lot of development. And each of these dots represents a hotel in development across Albania. So it's not just in Tirana or Durrës, just outside the capital, all the way down the coast. That coastline is being developed for tourism and I think is an interesting country and another potential hotspot as we move forward. And you can see the plethora of brands developing there. So with that, I'm just going to summarize quickly. As you've heard me say a number of times, we're nearly back from an occupancy perspective, but ADR is way ahead. Groups are holding us back. Southeastern European trends very much aligned with the rest of the continent. The pipeline, it's not huge for this region, not that significant. Some markets will be more impacted, of course, than others, but not of overly concerning. And then finally, of course, we're going to be keeping our eye on the cost of living, as, of course, that is the biggest challenge for the industry, but ultimately we still remain optimistic for this region and wider Europe as we move forward. And with that, I'll say thank you all for your attention and have a great day. Thank you.